Yes, welcome again to my screen. Welcome again to my channel. This channel is known as Proving the Market and it's done by yours truly, Kojak FX. The last time I came here, guys, we talked about a trade which we were taking at the moment. The trade that was already in procession at the time, and that was the GBPJPY trade. And I'm glad to tell you that our trade has hit take profit. I'm so happy about that. Precisely at our desired target. And I did take another trade anyway, but that one spun into a loss, and there was reason for that, which I'm going to be sharing on this section today. Guys, if I tell you I wasn't happy about the loss we had just after the euphoria of the GBPJPY trade, which hit take profit, then only to come and get a loss. The feeling is not nice at all. The feeling is not nice at all. But that's what it entails, to trade forex. As clear and understand, that's what it entails to trade forex, and that's what I'm coming here to do, guys, to show you guys exactly with all transparency how trading the financial market looks like, feels like, and realistically is. So today I'll be jumping into the chart. The first one we'll talk about is the GBPJPY trade that hit take profit, and then we'll go on to talk about the NZD-CHF trade which we entered, and then after that we'll look out for some prospective trades which we'll be taking. So it's more like a review and forecast as well. So let's go into the chat now. In case you're new to the channel, please subscribe, and for returning subscribers, I'm here to give you some very, very important and juicy stuff from top-down analysis, and then find some trading opportunities. So without wasting so much time, let's go into the charts. So the first one we're talking about here now is the GBPJPY trade. So quickly, all right, you can see our GBPJPY trade has hit take profit here. You can see nicely we've hit take profit. We got into this trade here at the break of the counter trend line, the 4-hour counter trend line. We made our first level target to be here. The overall target is this green zone, which is the weekly zone. But I did state in my last video the concerns I had about the trade getting here. In case you missed out on that, that's a very important video. Please go back and watch the video. I had some serious issues with the market getting to this level. It might eventually get there, don't get me wrong, but as a fund manager, I'm here to trade and make money, and if I see setups that will prevent me from making money, I'm not going to take them. If I see the ones that have a high probability of getting through, no matter the risk to reward ratio of it, as far as it's favorable, and it's favorable, at least 1:1 and above, I'm going to take the trade. So for this particular trade, I took it at the break of the counter trend line. I didn't aim for the 100% retracement, which is the monthly zone here, the weekly zone here. I rather aimed for the first weekly zone, which is this red line. This is a weekly zone, and it's a very strong one at that. So I told myself, if I get in here, I'm coming out here. I'm coming out here with my profits, and that's exactly what happened. So we got in here on 3rd of September. We got into this trade, and 3rd of September was Tuesday, and we hit take profit on Friday. So our trade just spun just about 3 days, so that's the GBPJPY trade, and the risk reward was 1:4, 1:1.4 rather, which is good. That's our GBPJPY trade. For those that don't understand how we got into this trade, just for recapping sake, I'm just going to go over to the monthly. So on the monthly, we try to trade in the overall direction of the trend. So this was a long, this line you can see here is a bearish trend line that spawned from years ago on the GBPJPY chart, and it got broken right here. So when we got broken when the price broke above this trend line here, it also broke this monthly resistance. And after breaking, let me just enlarge this so that we can see what's happening. Can see what's happening. So nice and easy. So when we came here, we rejected and broke it eventually. Not only breaking, we broke the monthly zone. We got to a weekly resistance and the market spun back down. Now there was this trend line on the weekly. This trend line was done on the weekly. The weekly bearish engulfing kind of broke that trend line and also broke the monthly zone. We got back into the monthly zone. Now when we got back into the monthly zone, we had two regions of concern, which was this one, the weekly zone, and also a second weekly zone. Now this second weekly zone is more like fib. So when we did that, we're like, okay, the market might be playing this. Yeah, we say the market might be playing this fib, which is exactly there. You can see that the zone is right there. So given that that area consists of a fib, a confluence of a fib and a weekly zone, I was very well sure that the market was going to react there, and hence that's why this simulation was done. This simulation was done. So this is exactly what I expected the market to do when it gets here. I mean, given that we've broken this overall trend line on the monthly, and we're coming to retest the trend line. We're not only retesting the trend line as at this zone. We have not done the retest anyway. We might have done it with just a week, but it's still linear. So this simulation was done. So a proper retest of this trend line and then the weekly zone, we'll see the price of GBPJPY should back in line with our bias. We are only looking for buy trades. So in line with our bias, that's what was expected of GBPJPY. So what happened then? We just scaled to the weekly. On the weekly, this is that trend line I was telling you about. Yep. So this is the trend line I was telling you about. So this trend line got broken here. You can see the strong weekly bearish break, and price came above it. So price came actually to this zone here and wicked above it back into the next weekly zone above. So that's where actually when price was retracing, all I did was to scale to, because I wanted to look for a quick trade. What I needed to do was to scale to the 4 hours. So this entire move to the upside, so this entire retracement to the upside was very well anticipated. Some traders will want to trade it. I don't make this type of trades, although they are just retracing, they are temporary retracements, they are pullbacks. I only trade in line. I don't trade pullbacks. I only trade in line with the direction of the trend. So as it was pulling back this way to the monthly zone, it didn't give me any of my setups, so there was no need to jump into the trade. However, I was waiting for a setup right at the monthly zone. And in case you don't know why I think I was waiting for the setup only at the monthly zone, please go back to I think 3 episodes ago on GBPJPY on one of my YouTubes, on one of my channels. When I talked about this, I analyzed this and showed you why I was expecting a larger retracement for GBPJPY, and you will see why I did that. First and foremost, anyway, just to say it, first and foremost, the break was very steep, so I was expecting a steep retracement back to the monthly zone. And most of all, I did say that whenever we break out of a major zone, we usually break it once and then retest it again, and then once we come down, we are going to have to retrace back to the major zone, which is exactly what happened here. At a point here, guys, I must say it, at a point here, when price got here, when price got to this level, you guys know that, when price got to this level, some people, so just want to make sure that My mouse isn't. Some person started making some traders, day traders exactly. Let me just spell it out. Day traders started making bearish calls for GBPJPY. And like I said, and I'm going to say it again, that is the difference between swing traders and day traders. As a swing trader, I see the market differently. As a day trader, those spots and resistant levels that you usually occupy yourself with on the lower time frames, they are going to be violated every now and then. Because you're not seeing this overall, because day traders were not seeing this overall level, which is the monthly level, that's why they started making calls here, bearish calls here. I know some very prominent ones among them, I'm not going to call names, actually made a call for a bearish move here. And when that happened, I was like, oh, well, what do I know? But since we are two different styles of traders, I'm just going to leave you to do your thing. After all, we have different concepts. So when they started making bearish calls here, I wasn't interested in GBPJPY. I told myself that GBPJPY is going to have to come here first and then break it. Have to come here first, give us a chance to draw a counter trend line properly. As at here, when the market was causing all through, causing to the upside all through here, we didn't really get a chance to draw a counter trend line. Even if you did get a chance to draw a counter trend line, it would be too steep, and it's not, the counter trend line is not going to take you to the monthly zone. So I was just waiting patiently for a dip and then a direct, sinking or touch at the monthly zone. So when that happened right here, I was able to connect the two dots of my counter trend line. So I was able to connect this first dot and then this second one, which is the 2 points of my counter trend line, and allow the market to move. I even made a simulation here. You can see, guys, I made this simulation here, and this all I expected the market to do. The market did exactly just that. After it had pushed up, stopped all the day traders out in their trades, stopped all of them out, came to the monthly zone, and then has come to break the 4 hour counter trend. Immediately that happened, I jumped into the trade, and then I aimed, like I said, I aimed only for this weekly zone, and that gave me a risk reward of 1:1.4, and I was okay with that. So GBPJPY, looking forward, it's let's just see how it will react. Let's just see how GBPJPY reacts around this level. Let's just see how GBPJPY reacts around this level. Ideally, I'll be waiting for a break. So we did have this break. We had this break here. So ideally, I'm waiting for a break, and then if price sustains below it, then we can take it down. We can take it down all the way to the monthly, to the weekly zone. However, you can see that price broke it and is now, even has now gone to break above it again. So GBPJPY is now having issues. So from what we can see on the chart, GBPJPY is having issues with this level, which is what we expected because it's actually a weekly level. So it's having issues with this level. So I'll be waiting for a break, and then and if price breaks and sustains below this weekly zone, I'll be looking to add more sales to it. So that's GBPJPY in a nutshell. Let's go over to the next trade we took. We took a trade on NZD CHF. So we took a trade on NZD CHF. So I just got to the chase. NZD CHF. I took a trade somewhere here at NZD CHF. As at the time, I had not looked at my levels properly. So I'm just telling you guys the issues that I came to find out about the trade. Because when the market, when the market gives you something that looks like a setup, and all of a sudden the market doesn't just go in your direction at all. The moment you get into the trade, the market, stops you out within a few hours. Yeah, those kind of trades usually give me cause for concern. It gives me cause for a concern because it's too quick. Considering the quality of trades I like to take trades that only have high probabilities. The highest probability trades Those are kind of trades like trading. So when this happened, I entered into this GBP NZDCHF trade for a buy, and then I was stopped out within a space of 4 to 6 hours. No, within a space of a day rather, I was stopped out. So I had to come back and review this trade, and I found out some things. I did have issues anyway. I did have issues with my entry. First of all, this counter trend line atmosphere it was very linear. I did factor that in before entering the trade. However, because it was presenting something that looked like a nice setup, I took the trade, and risked only what I can afford to lose, which is what I always preach about here. You should only lose what you can afford to lose. And also at the time, I had not gone to look at my zones, my major zones properly. As at then, there was this zone right here. So as at then, there was this zone right here which looked like a major zone. This zone was not, I didn't even see this zone. I didn't go back, I didn't zoom out rather, to actually see where the zones are. So I had a zone that was very thick, and the zone that was very thick incorporated this weekly zone, making it look like a major zone, or making it look like the monthly zone. So when I saw this break here, I was quick to enter, and then when market came and stopped me out. So that forced me to zoom out. That's the first instance. The second instance is, the second issue I had with the trade is, because it's a setup, I failed to go back and reanalyze the bias on this trade. I shouldn't have been entering a buy opportunity, because the overall trend for NZDCHF, the overall trend is bearish. So NZDCHF, let's just quickly go to the monthly time frame so you can see what I'm saying. So NZDCHF, you can see, guys, NZDCHF is all-time bearish by the major trend line, all-time bearish. Now we go over to the weekly. So when we came to the weekly, what are we looking for? We're looking for chart patterns. So the market came to create something that looked like a chart pattern here, and that's a triple bottom, or you can even call it an inverse head and shoulder. So that's a triple bottom with inverse head and shoulder, and this being the neckline. So the market broke the neckline. Now, you know about chart patterns, and when you see them on higher time frames like weekly and monthly, those patterns hold a major percentage of the time whenever they are broken. So this particular one broke. However, price didn't sustain above it and came back right down. After this break, that means this weekly break below the neckline of this chart pattern just signified that this is a failed reverse pattern. It's a failed inverse head and shoulder pattern. So as it has failed, it means that this trade has conformed back, has had a conformity back to the overall bias, which is bearish, because this inverse head and shoulder was meant to reverse this entire bearish trend, and it didn't do that. It failed. So we are still back being bearish, and it went ahead to break the monthly zone below. So after it had broken the monthly zone below and came to retest here, why on earth will I be looking for a buy trade? I didn't see this. I didn't know what I was thinking. So I have two criteria to look for to go against a major trend. I have two criteria which I use to go against major trend. The first and foremost is let there be a chart pattern on the weekly or the monthly and above that will make me want to change my bias of an overall trend. Once a chart pattern holds, that's the first criteria. I will change my bias immediately. Even if it's medium term, I will change my bias. The second criterion is if an inner weekly trend line is broken. So now we're in the weekly time frame now. I failed to come and see whether any trend line. So this is a trend line. This inner weekly trend line was broken here. So it was broken here. and also broke the neckline or that weekly zone. However, price has come below again and has come back to the monthly zone and has broken back. So it has negated the movement of price consequent to the break of that inner weekly trend line, has negated its meaning. So we are back being bearish and not bullish. So the inner weekly trend line was actually broken here. The inner weekly trend line was actually broken here, but price has come back to trade below it and has also, broken the monthly zone to trade below it. So I shouldn't have been looking for so even if I put even if I decided to check here, I usually like being careful. So even if I decided to put an inner weekly trend line here as well, like so, the market has still not come and broken above it, so we're still bearish. So I don't know why I was looking for a buy trade. It was just this is just one of those trades that I don't want to say it. These are one of those trades that will want to annoy you as to why you took it, as to why you took them. But it's always pays to to exercise caution and patience before you execute your trades, to know whether you've ticked all the you have ticked all the I's and crossed all your T's, before entering any trade. So that having been said, when we now came over to the 4-hourly, so because of we had broken above here, so this is the first break. Now second break. So the second break, why me and my second break, that's why I started looking for a buy opportunity. But then I shouldn't have, because it just goes against my plan of trading, with trading actually with a plan. I don't enter an inverse trade, a trade that is inverse to the overall trend, except those criteria I mentioned. One or two of them have occurred, and none of them occurred in this case. So I wonder why I got into the dissected trade. That was why I was quickly stopped out. I got into the trade here. And I was quickly stopped out. The market didn't even the market showed no mercy. I got into the trade here and was quickly stopped out. So that made me to come out and replot the levels correctly. So these are the main levels now. And then that's why price is reacting here. So NZD-CHF, I will not be looking to take any trade on NZD-CHF for now, because we've not, none of those criteria have been met for me to change. I need to see, actually we're still bearish, so I need to see NZD-CHF do this. I need to see NZD-CHF come down below and give us a selling opportunity. Then I'll take it. Understand? I'll take it to the downside like so. For now, that hasn't happened. Let's just go to the daily time frame to look. So we just break in for now. Okay, you can count this as a break. So we are just breaking the monthly zone. However, we've not broken it fully to trade below it. So my hands are off for now on NZD-CHF until we get a trading opportunity. So those are the two trades. So going forward now, which trades are we looking at? I'm actually looking at two prospective trades, which I'll be talking about now. The first one is Euro USD. So Euro USD, you can remember, guys, last time I came here, I was anticipating, or I'm still anticipating a buy on Euro USD. Our counter trend line has been drawn nicely here. I drew this counter trend line after the connection of its two dots and just stretched it all the way to the weekly zone. That's how to draw your counter trend lines and allow the market to act. Allow the market to come to you. Apply basic laws of price action. Apply basic laws of price action. Don't buy high, you buy low and then you sell high. So when I connected these two dots and allowed it to stretch, ideally the only place I'll be thinking of buying is somewhere within this region. So ideally the only place I'll be thinking of buying is somewhere within this region. somewhere within this level, because if I buy here, I will be able to maximize my returns. I will be able to buy low and then have a higher profit target than than buying somewhere like here. Because if I buy here, what will be my stop loss? My stop loss will be wide. It will negate the usual or the basic law of price action, which states you should buy low and say high. This one, you're more or less buying high, because if you're buying there, where is your stop loss going to be and where is your take profit going to be? You will not have a good risk reward ratio, and the trade will be, and it will be a bad trade. So when our counter trend line got tested here, so our line came here and got tested but traded back below it. That's just to show that the market is just not ready to go, and that's how it happens. So if you are the kind of trader that trades counter trend line and lower time frames, like the 1 hour, look at what that would have done to you. You would have gotten, oh, cool and fine, at least the 1 hour even showed a good rejection below the 1 hour, still showed a good rejection below the counter trend line. And I think this is when we're expecting a news. And I think there was I think NFP came out. Yeah, NFP came out that Friday. So that's what momentarily caused price to rally. But that's just the news, the fundamental news, and I'm not a fundamentalist. So its price has now come to trade below the counter trend line, and surprisingly enough, price is behaving in the way and manner as indicated by this my simulation. Price is simulating in that way and manner. So I will not be interested in entering any Euro USD trade. For now, my bias is bearish on Euro USD. We are long term. My bias is bullish on Euro USD. We are long term bearish, medium term bullish, and it's only until we take out this green zone and then eventually take out this trend line, this overarching trend line, is only when we take it out like so that will be all-time bullish, overall bullish Euro USD. For now, we are long-term bearish, medium-term bullish. So I'm trading from zone to zone in this case. And the only reason I'm trading against the trend, like I said, is if you go to the weekly, not only did the double bottom form here, our inner counter trend line. First of all, this first inner counter trend line was broken. The next inner counter trend line was broken. So this double bottom gave birth to the break of this inner trend line. So the two criteria occurred here. So that's why I'm bearish, and that's why I'm bullish. And then we also came to break this weekly zone as well. And then if price comes to reject, they're simple and straightforward. After all those happened, I just told myself, since this is the weekly zone, if price comes to, so this is the weekly zone, so if price comes here and rejects and sustains and then gives us a setup, which is this setup like I've said, I've exemplified here, and breaks it, I'll be entering for a trade. However, I want a situation where it breaks it at a low price so that I can enter the trade. If it breaks it at a low price, I'll enter the trade. So for now, we are still expecting Euro USD to give us a trading opportunity, but that hasn't happened. So Euro USD is off for now. Then the next pair I'll be looking at is I'm looking to trade this BTC. Okay, so nice and clear on BTC. My BTC trade was shown in our last episode or 2 episodes ago, where I was expecting BTC. You guys know that we've taken a loss on BTC, and I came here to show that and to review the trade. And I gave a trade idea that if this happens, which is if price came back after price stopped us out and came back and broke below the monthly zone, if price breaks out of the wedge and then and then comes to break out of this weekly zone, which is the zone that we didn't factor in, that cost us to lose some money on BTC, it's now become a major zone, at least for the weekly basis. So if price comes below this and then sustains below it, I'll be looking for sales on BTC. Price has done that, has broken it, and it's now trying to give us a setup, which we like. And I also did point out this, I was expecting BTC to still rally around this area, at least teeter towards its edge before eventually breaking out on either side. However, BTC has decided to do BTC things. I'm not the market. I will not tell the market what to do. It broke the wedge. It broke the wedge right here and has come to break the weekly support. And after doing that, it's actually giving us a setup we are likely going to trade. So I'll only be interested in if BTC does this, comes to the monthly zone here and then breaks. That's when I'll be interested in this trade. So that's just so that's my take on BTC. I'm only going to trade that kind of setup. So for now, these are the two trades I'm looking to trade. These are the two trades I'm watching actively. There are two trades I'm watching actively, and then I'll be waiting to hop on once the criteria fails. Now BTC doing this is not going to be good for BTC holders, because once our counter trend line is broken, guys, the next point of call for BTC, once our counter trend line is broken, the next point of call for BTC is $52,500 per coin. And then once the bearish sentiment persists, Bitcoin will eventually, Bitcoin will eventually get to $47,000 per coin. So Bitcoin currently is trading at $55,000 per coin. Our first anticipated target, once our trade setup kicks in, is 52,000 and eventually 47,000. So guys, that's it on BTC. So we're just expecting two trades, Euro USD and BTC USD, to give us entry opportunities. There is really nothing to look at in the other pairs, so there is no need to talk about them. So thank you guys for coming to the end of this session with me on trading, on proving the markets. It was glad to have shown you guys the important trading sites, and how to actually use the top-down analysis to deduce the intended direction of movement of market and capitalize on it. So I'll be coming next on this channel to talk about the trades and their progress, and anyone that I might have entered, I will definitely come back to give you guys updates on it. So stay tuned. Thank you guys. We've come to the end of this video. See you in my next video. Take care and bye.